Good day, everyone, and welcome to today's class. And today we are going to talk about we are going to be talking about accounting for non-current asset and depreciation. We are going to be talking about accounting for non-current asset and depreciation. What do we refer to? What do we refer to as non-current asset? What do we refer to as depreciation? That's what we are going to be talking about in today's. That is what we are going to be talking about in today's class. We are going to be talking about, there are two things: non-current assets, and the second one is what is depreciation. So, what do we refer to as non-current asset? What do we refer to as depreciation? And what are the various methods of what are the various methods of accounting for depreciation? That is what we are going to be talking about today. So I welcome you all once again. If you remember, during some of our previous classes, we're able to talk about that we have 5 elements of financial statement. That is, we have how many elements of financial statement? We have 5 elements of financial statement. We can have that of the asset. We can have that of the liability. We can have equity. And we can also have income as well. So these are the 5 elements of financial statement. These are the 5 elements of financial statement. One of them is one of them is asset. One of them is liability. One of them is equity. Another one is income. And we also have expenses as well. So these are the 5 elements of financial statement. Meaning that all accounting transactions can be categorized into 5. All accounting transactions can be categorized into how many? It can be categorized into 5. Is either it is asset, is either it's a liability, is either it is equity, income, and expenses. So we have been talking about, and every one of us, we are all familiar with this particular 5 sentence before. So now, another thing that we now need to talk about now is if you remember in our introduction classes, we make mention of what are assets. Assets are what? Assets are resources. Assets are what? Assets are resources that is being controlled by what? By an entity as a result of of past events, from which future economic benefit is expected to flow in. When we say assets, just have it at the back of your mind that for something to be asset, it must be a resources. A resources that is being controlled by who? By the entity. Asset is a resources that is being controlled by who? By the entity. As a result of what? As a result of past events. As a result of what? Past event, meaning that for you to say something is your asset, it's not something that you are going to buy tomorrow. It's not something that you're going to buy tomorrow. It must exist by now. Maybe the laptop that you're using or the telephone that you're using now, it is your asset. So resources that you have as at now is your asset. And we say that assets are resources. Look at the definition here. Everybody has access to this note as well. We say it can be defined as a resources controlled by an entity as a result of of past events, and from which future economic benefits are expected to flow into the entity. Please always try to unmute yourself, please. Now we say assets are resources that is being controlled by an entity as a result of As a result of past events, from which future economic benefit is expected to flow in. Meaning that when you are using this, when you say something is your asset, it must be a resource. It must be owned or controlled by the entity. The laptop that I'm using now is your own asset. Because why? You don't have control of it. You can't say now that, oh, Abdulrashid, give me your laptop. No. For you to say, and the phone that you're using or the laptop that you're using to listen to me now as well is your resources. I can't take it away from you. So for you to say something is your word, is your asset, it has to be something that you have control over. It's not something that someone can just collect from you at any time. It must be something that you have control over. That is one of the key definition of this word of assets. It must be a resources that is controlled by the entity. And it must have resulted from past events, meaning that words from past events, that is to say that asset will ordinarily not be for future transaction that is yet to happen. No, it's not going to be from there. It's going to be as at now. Oh, before we enter what 2023, I want to buy what? I want to buy a new laptop, a new phone. It is not yet what? It is not yet your asset. What we are talking about is not tomorrow. It's not things that you're going to buy tomorrow. It's things that you have today. That is to say that an asset will ordinarily not be from a future transaction that is yet to happen. Asset will not be from your word, future transaction. It will be from what? Things that you have now. It will be from what? From things that you have, what? Things that you have now. And another key definition from this is economic benefits. Economic benefit in terms of what? As a result of as a result of you using it, it will bring what? Economic benefit to you. It will bring what? Economic benefit to you. Economic benefit are expected to be derived by the entity from the asset in the future. So meaning that what, as I'm using it now, you have this particular asset now, in the future, inflow will be coming as a result of you having that particular asset. Economic benefits are expected to be derived by the entity from the asset in what? In future. Anything that has no future economic benefits cannot be referred to as asset. Anything that does not have what? Anything that does not have future economic benefit, that as a result of you using it, there's no any benefit to you. The phone that you're using now, it has a benefit to you. The laptop that you're using now, it has a benefit to you, so it qualifies for asset. So if it is not going to bring any benefit to you, then we can't say it is what it is an asset. Okay. Now, you know the definition of asset now. You know the key element of this definition. We say that asset can be defined as a word, as a resources controlled by who? Controlled by an entity as a result of what? As a result of past event. As a result of what? Of past event, from which word future economic benefit is expected to flow in. And what are the key definition of this? We say it is a resources. In other words, for anything to be called asset, it must be valuable. It must be valuable. It must be able to be converted into a monetary terms. It must be owned by you. It must be as a result of past event. It must bring benefit to you. Now, these are the definition of asset. We now have what? We have two types of what? We have two types of assets. We have what we call what? Non-current assets. And we also have what? We also have current what? We also have current assets. How many types of assets do we have? We have two types of assets. Same thing to what to liability as well. We have two types of what? We have two types of liability. We have what we call non-current what? We have what we call non-current liability. And we also have what? We also have current what? We also have current liabilities. Those are the what? Now, what we are dealing with now is about assets. Is about what? Is about assets. Now, when we say what non-current what, when we say non-current asset, it means that those are assets that will bring what economic benefit for more than what? For more than 12 months. At least you can remember this. More than what? More than 12 months. More than, let's say, more than 1 year. Why this is what? Within a year. And some of you will remember, maybe in our what? Maybe in our SSC, they usually call this non-current asset. They usually call it before fixed asset. So if you're a commercial student in your secondary school, I think this is the terms that you'll be familiar with. They call it what? Fixed asset. So fixed asset is also what? The new name, we call it what? Non-current asset. We don't call it what? Fixed asset anymore. We call it what? Non-current asset. Non-current asset. But the meaning still remains the same. It's just the word. It's just the sentence now that are not the same. But the meaning of fixed asset is the same meaning of what? Of non-current asset. Only that the name changed, but the meaning still remains the same thing. When we say what? Non-current asset are those assets that will last more than what? That will last for more than what? For more than 1 year. That is those assets that will bring what? That will bring inflow. That will bring what? That will bring inflow. In more than what? In more than 1 year are what we call what? Non-current assets. And I want to tell you something as well. Non-current asset is further divided into two. Non-current asset is further divided into what? It's further divided into two. When we say what? NCA means what? Non-current asset. Non-current asset is further divided into how many? It's further divided into two. We have what we call the word, the fixed. We have what we call the word, the tangible. And we also have what we call what? Intangible. Non-current asset is further divided into how many? Please don't forget. We have what? Tangible, and we also have what? Intangible. And we also have what? Intangible. These are the further classification of what? Of non-current assets. But what we are dealing with here, is what? Is this. We are not dealing with what? Intangible for now. As they are moving on in this particular professional exam, they are going to know this about. You are going to know this as well. For now, we are only talking about the tangible word non-current assets. We are only talking about what? Tangible word non-current assets. Example of them, like your what? Your plant and what? Your plant and machinery. Your plant and machinery. Like your what? Your motor van. like your furniture, and fleeting, your land and building. These are tangible assets. When we say tangible asset, is that word, we can touch them. We can touch it. It has presence. But when we say what intangible asset are those assets that does not have intangible asset are those assets that does not have a physical word, a physical substance. Intangible assets are identified group of assets. They are identified group of assets that does not have a physical substance. But this one, tangible, they have a physical substance. Intangible asset does not have a physical substance. Example of them is your goodwill. Your brand. If you have any copyright. So what we are, and when you move on, we have in accounting, you remember in our introduction class, we talk about what International Accounting Standard Board. So we have what International Accounting Standard what? International Accounting Standard 38. It deals with what intangible assets. For the tangible, International Accounting Standard 16 talk about tangible assets. Also, IS 40 also talk about what intangible asset as well. So because everything that we are doing in accounting is regulated, there's a standard, there's a guidelines that's going to inform you that, oh, if this thing occurs, this is how you should work. This is the best way you can treat it. If this particular transaction occurs, this is the best way you can treat it. So for what we're talking about today, we are going to be making reference to IS 16. And what does IS 16 mean? IS 16 means property, plant, and equipment. IS 16 means what? Property, plant, and equipment. We call it what? P. IS 16 means what? Property, plant, and what? And equipment. The IS, I also make mention of one standard which is IS 40. IS 40 deal with what? Investment property. I also make mention of what? Of IS 38. IS 38 deal with what? Intangible assets. So what we'll be making reference to now is this. So when you get to what? When you get to skills level at the professional, you'll be talking about what? You'll be talking more of what? You'll be talking more of some of this what? All this standard. So what we are just going to do, this is the first level. We are just going to introduce you briefly, brief introduction to what? To IS 16. Don't forget, we have how many types of assets? We have two types of assets, the non-current asset and the current asset. The non-current asset is further divided into two, tangible and the intangible. Classification of assets, just like what I was explaining as well. There are two forms of assets held by a business organization. They are non-current, and we also have what? Current. And like I also explained earlier, the non-current asset is further divided into how many? Is further divided into two. We have the tangible non-current asset, and we also have the intangible non-current asset.
Okay. Asset is divided into how many? Two, tangible and what? And intangible. Asset is divided into two, non-current and current. Asset is divided into two, non-current asset and current asset. Non-current asset is further divided into how many? It's further divided into two, tangible and intangible. Non-current asset is further divided into how many? Two, tangible and intangible. So now the next thing that we now need to talk about now is how do we determine the cost of non-current assets? How do we determine the cost of what? Non-current asset. Please don't forget, the non-current asset that we are referring to now is what? Is the tangible, okay? Determination. Now, look at this. Initial what? Measurements. Initial what? Measurement. And let me tell you something. The initial measurement for assets is at cost. Initial measurement, it has what? At cost. So that you know, I'm just saying equal to cost. Meaning that what? If you want, when you want to measure your non-current assets, when we say initial means what? At the time that you are buying it. The next one, we now have another one called what? Subsequent what? Measurement. Subsequent what? Subsequent measurement. Subsequent measurement. Let me tell you something. If you want, initial measurement of asset is at what? Is at cost. Initial measurement is at what? Is at cost. But subsequent measurement can either be cost, what we call cost model, or is going to be what? Revaluation model. When you want to measure your non-current asset, your asset, the initial measurement is at what? Is at cost. Subsequent measurement for tangible non-current asset can either be at cost model or revaluation model. Because what we are talking about now, we are talking about IS what? We are talking about IS 16. So IS 16 said that what? Okay, if you want to measure your words, if you want to measure your property, plant, and equipment, the initial measurement will be at what? Initial measurement will be at cost. While the subsequent measurement, it will be at what? Either you are going to use cost or you are going to use what? Revaluation model. Now, what do we now refer to as what? As this cost for the initial measurement. What do we refer to as what now? As cost. What is a cost? Because we say now that initial, meaning that what, when you first buy this one, when you first buy this particular asset, at the date of acquisition, item of what? Property, plant, and equipment are recorded at their words, initial historical cost. Cost in this case refer to the amount of cash or cash equivalent that was paid. The cash that you pay. Or the fair value of other consideration that was given instead of cash to acquire the asset at the time of acquisition or construction. So meaning that what? You may not pay what? You may not pay cash. But the second thing will not be what are the this thing? What are the other words? What are the other costs? What are the other costs that you pay? What are the other costs that you pay? What are the other costs that you pay apart from cash? We are not going to look at the fair value. When we say fair value means what? Fair value means market price. Fair value means what? Market price. Fair value means what? Market price. It is today's price. That is what we are referring to. It is what? It is today's what? It is today's price. It is the market price. So assuming that you are not paying cash now, you are not going to look at, okay, what do you draw, for example? Oh, I'm not paying you cash to acquire this asset, but I'm going to drop my laptop. I'm going to drop my phone. So meaning that there's no cash now, the fair value of your laptop or your phone will not serve as the cost that you are paying. When we now say fair value is that, okay, what about if you want to sell your laptop? How much is it going to cost? How much are you going to receive? What is the proceed that you're going to receive? So the proceed that I'm going to receive is, well, let's say it's 10,000. So that means that that is the purchase that is the amount that we are going to use as the consideration that you pay to acquire the asset. Now, when we now say cost, we have some component of this cost. Component of acquisition cost. Generally, the cost of an item of PPE comprises of one is purchase price plus import the import duty. If it is not locally made, we are going to add it. The amount that you pay. And non-recurring levies, e.g., development levies, concert levy, and the rest like that. We call this, I'm coming. This is one. Two, we now have what we call directly attributed. Now, so whatever you now have here now, that will not be the amount of what? That will not be the amount that you are going to recognize as your what? The amount that you're going to recognize as your cost for this particular what? For this particular asset. That will be the amount that you're going to recognize as what? That's going to be the amount that you're going to recognize as the cost for this particular asset. Now, let me now explain something to you. You see, from here to here, let me call this one A. Or what I can do, hold on. Okay. So let's go now. Why this? I'm going to refer it as what? As B. Directly what? Attributable cost. When we say directly attributable cost, directly and indirectly attributable costs are also meant for what? For capitalization. When we say directly attributable costs, it means that those costs that you would not what you could have not what paid for it, assuming that you are not buying the asset. Meaning that what those costs that you are paying for as a result of what? Buying the asset. Directly attributable cost means what? Those costs that you are paying for as a result of what? Buying the asset. Meaning that what? Assuming that you are not buying this particular asset, you are not going to pay for it. Let's say, for example, now, a purchase of what? AC, a air conditioner. You purchase air conditioner. You purchase LG AC now. Let's say you paid what? Amount paid. The amount paid is 200,000. Let's say it's from overseas. It's not in Nigeria. But converting the word, this foreign currency to Nigerian currency now, this is the word, the Naira equivalent, 200,000. You also pay Nigerian what? Nigerian custom. You pay them what? Let's say you pay custom 10,000. You also pay some development levies of what? 5,000. Now, let's say, for example, now, this is the amount that you could have paid, right? But there was now what? You are not giving a what? A discount. Let's say you are giving a discount of what? You are giving a discount of 10,000 naira. So I'll remove the discount. Now, where I'm not going to now is the directly attributable cost. The directly attributable cost, for example, now let's say installation. Installation is a what? Is a directly attributable cost. Let's say you pay installation to that electrician 15,000 naira. So any cost, let's say you also pay what? A legal fees. let's say you also pay what, or sometimes we can call it professional. You also pay your what, maybe you shall pay some what, some professionals. You also add all those costs together. So whatever you have now, that is a cost that you are going to what, that you are going to show in your financial statement as the cost for this particular what, LGAC. When we say directly attributable costs, please don't forget, when we say directly attributable costs, are those costs that you incur as a result of buying the asset. If you are not buying this particular what, AC now, you are not going to pay for installation. You are not going to pay for these legal fees. You are not going to pay for these professional charges. So all those costs that you incur, this one does not necessarily that you have to pay to the vendor. Let's say what I paid the vendor who I'm buying this particular item from is what is on. If I remove the discount now, that means I'm paying what, 190,000. That is the invoice. Let's say 200,000 is the invoice amount. And there was a discount that was what? There was a discount that is given. We have a word. Let's say this one is the invoice. The invoice amount. And there was a discount of what? There was a discount of 10,000 naira. So that means that net of the discount now, we are paying what? 190,000. So that is what I pay to the vendor. So any other cost, don't forget to, what you pay the vendor now, net of the discount, is what? Is 190,000. Any other cost that you incur as a result of bringing this asset to its present condition, as a result of bringing this asset to what? To its present condition in terms of what? So that you're able to use it. So that you're able to do what? So that you're able to use it. All those costs are meant for capitalization. Capitalization in terms of what? You are going to add it. So let's say, for example, now I paid you what? I paid you 190,000 naira. But let's say, for example, now you are what? You stay in what? In Imo now. And me, I stay in what? I stay in Delta now. You know that from Imo now to what? To Delta, I will incur what? Transportation. I want to use this particular what? Equipment in what? In Delta now. And I get it from you in what? In Imo. So meaning that what now, there's going to be a transportation cost now, from what now? From Imo to what? To Delta. So if I get to what now, if I bring these assets to what now? To Delta as well, I can't use it. I still have to do some work, some installation. So those installation costs as well, you will also add it. So you will not say, what we are referring to now is that you are not going to say that your cost, if someone asks you now that, oh, how much do you buy this particular equipment? You are not going to say what, 190,000 naira. Although this is what you pay the vendor, but you are also going to add what? Any other cost. You are also going to add what? Any other cost that you incur as a result of buying this particular AC. Let's say the other cost, your transportation, your installation, the legal fees, the development, the import, and other costs that you incur. Let's say it is what? It is 60,000 naira. So meaning that what now? In your book of account, you are going to say that, oh, this AC is what? It costs 250,000 naira. That is what you are going to show. Not what? Not 190,000. That is what we are saying. That you also had what? Other costs that you incur as a result of what? As a result of buying this particular one. As a result of buying this particular equipment. it is not only the one that you pay the what, it is not only the one that you pay that particular supplier in what, in Imo. Other costs that you want, other costs that you paid as well, you also need to do what? You also need to add it as well. I hope everybody understands this. Please let me hear from the comment section. Do you understand? Or from the chat box, do you understand so far? You can unmute yourself, okay? Yeah, thank you very much. Okay, so now, if you understand now, let's proceed. Now, we now have what? We have two types of what? Expenditure. We have what? We have, let's say, types of expenditure. And I want to give you a simple logic behind these two. When we say what? Capital expenditure are those what? Are those expenditure that you incur to what? To purchase a non-current asset. Capital expenditure are what? Are those expenditure that you incur to do what? To purchase a non-current asset. This is it. Capital expenditure may be defined as the cost of acquiring a non-current asset for use in what? In an entity. Capital expenditure includes the cost incurring in adding value to the existing non-current assets in order to what? To improve their what? Their capacity. What I'm saying now is what? One, when we say capital expenditure are those expenditure that you incur to acquire a what? A new what? Non-current asset. That is the cost. Capital expenditure are those costs that you incur to acquire a what? A new non-current asset. When we say what? Capital expenditure are those expenditure that you use to acquire a what? A non-current asset, a new non-current asset. Or if you did not what? If you did not acquire a new one, but the cost of improving the what? The existing one is also what we call what? Non-current assets. Cost of what? Improving the existing one, or cost of what? Acquiring a what? A new one. Those are what we call what? Capital expenditure. Don't forget, what is capital expenditure? Capital expenditure are those expenditure to acquire a what? A non-current asset, a new non-current asset, or cost of improving the what? The existing non-current asset. What is now recurrent expenditure? Recurrent expenditure, let me tell you, recurrent expenditure are expenditure of day-to-day running of the business. Recurrent expenditure are expenditure of what? Are expenditure of day-to-day running of the business. They are the expenditure that you incur to run the day-to-day of the business. This is what you have in your note as well. Example of what? Example of capital expenditure. Purchase price of non-current assets, such as the motor vehicle, such as building, such as furniture and crating, such as plant and machine. Extension or any improvement of the word of a permanent nature, the legal fees, the cost of acquiring or bringing a non-current asset to its present location, any other cost that must be incurred in getting the non-current asset ready for its intended use. Any other cost, so that the non-current asset will be what? It will be ready to use. And we say the second one, revenue expenditure. Revenue expenditure, on the other hand, is any cost in which is any potential is exhausted within what? One accounting period. Such expenditure are not made to increase or improve the value of the non-current asset, but rather are made for the maintenance and the day-to-day running of the business. That's why I make mention to you earlier that revenue expenditure are what? Revenue expenditure are those expenditure that you incur for the running, for the day-to-day running of the business, for maintenance, for day-to-day maintenance, the day-to-day running of the business are what we call what? Revenue expenditure. Revenue expenditure are what? Revenue expenditure are what? Are those expenditure that you incur for the day-to-day work, for the day-to-day running of the business. Now, there's another thing that you also need to be aware of. When we say what types of receipts, which is also in our note as well. I'm still coming back to what? Okay. We also have what we call types of receipts. We have what we call capital receipts. And we also have what we call revenue receipts. When we say capital receipts, those are the receipts. When we say receipt here, we are referring to as what? As income. We are referring to as what? We are referring to as income. We are referring to as what? We are referring to as income. Now, So when we say capital receipts, when we say revenue receipts, capital received are those what are those received when it was a non-current asset is sold. Capital received are those what are those receipts when it was a non-current asset is what is sold. While revenue received are those received from your day-to-day activities of the business. From the day-to-day activities of the world, activities of the business. Don't forget that. We have what? We have two types of expenditure. Capital and recurrent. We have two types of receipts. We have capital receipts and we also have what? Revenue. We also have revenue receipts. Capital receipts are those received when it was a non-current asset is what is being disposed. While a revenue received are those received that what from the normal trading, of the world of the business. Okay. Now I want to explain something to you before we go to depreciation now, because everything that we're talking about so far now is about what? Is about depreciation. It's about what? Non-current what? It's about non-current assets. It's about non-current assets. Now, what is the difference between capital and what? How can you differentiate? What's the difference between the two? The difference between capital and what and revenue. One of the differences is what? Is in terms of what? The time. That is for a capital what? For a capital expenditure. For a capital what? For a capital expenditure. The benefit is more than one accounting period. But a revenue expenditure, the benefit is just what? This year. It's just one accounting. Let's say my accounting starts from what? January, and it's going to end in what? In 31st of what? Of December. So when we say what? Revenue expenditure, the benefit of what? Of revenue expenditure is only going to elapse in what? 31st of December. But capital expenditure, their what? Their benefit is more than what? Is more than one accounting period. Their benefit is what? Their benefit is more than one accounting period. Their benefit is what? Their benefit is more than one accounting period. Their benefit is what? Is more than one accounting period. Don't forget, for what? The benefit of what? Of revenue expenditure is only what? One accounting period. But the benefit of incurring for what? For capital expenditure is more than what? Is more than one accounting period. And you can see, however, if the benefit derived from an item of expenditure extended to more than one period of account, then it should be referred to as what? As capital expenditure. It should be referred to as what? As capital expenditure. It should be referred to as what? As a capital expenditure. Now, in the exam, there's some time. The examiner will not ask you to what? The examiner will give you different items and they will not say you should categorize it. Either this one is going to be a capital or it's going to be what? A revenue. Meaning that what in the exam question now, and don't worry, I'm coming. Okay, let's hold on. Let's check one. Some time ago, they are going to ask you a question of what on this. What the examiner will now ask you is that what you should differentiate. They will give you the item of the cost. Okay, don't worry. You'll see it now. Okay. This is what September 2021 dies. Now, look at this one. Look at this question now. For 4.5 what? For 4.5 mark. Let's say Kofi Mensah, a cocoa merchant in what? In Accra. Present the following information for the month of April 2020. And once you are given any question, the first thing that you should try as much as possible to determine is that what is your destiny? Is that what is the requirement? The requirement now is that what? Classify the expenditure into capital and revenue. Meaning that, well, oh, all this particular expenditure now, the examiner is asking you that you should classify them. Either it is what? A capital or revenue expenditure. That is what you are asked to do. And don't forget, let me still go back to it so that we are going to answer this question together now. We say capital expenditure are those expenditure to acquire a new non-current asset or improvement to the existing one. And we say recurrent expenditure are those expenditure for the day-to-day running of the world, for the day-to-day running of the business. For the day-to-day running of who? For the day-to-day running of the business. Now, based on this particular question now, let's now solve it now. You can see the requirement to be what? The requirement is very clear. It's just for you to classify it into what? Oh, this one is going to be what? So what I want to do now, I can say what? Capital expenditure. I can also say what? Recurrent expenditure. Okay. But I can sum everything at the end of the day. This in Ghana cedis, and it's capped in 1,000. So we are now going to look at this now and check that which one is a what now? Which one is capital expenditure? Which one is what? Which one is revenue what? Revenue expenditure. Okay, so we can go now. Let's say brought a motor vehicle to transport produce to the market. When you bought a motor vehicle now, is that one a capital expenditure or a recurrent expenditure? Let me hear from the comment section, please. Number one, bought a motor vehicle to transport produce to the market. Is this a capital expenditure or a recurrent expenditure? At least we are more than the comment section I received now in the chat box. Because I want everybody to play along with me, please. And based on all the answers that we are given, we say that it is a what? It is a capital expenditure. So I can say what now? Bought motor vehicle, 5,000. Thank you, everyone. The next one, they say renovated the warehouse to pave a way for new wall, for new produce. I want to ask you again, and I want to receive this in the comment section as well. Is this a capital expenditure? Number 2, is this a capital expenditure or a what, or a recurrent expenditure? Number 2, renovated. I still need more answer, please. Is this a capital when you renovate? Is this a capital expenditure or a recurrent expenditure? That's what you are just doing. It's a capital expenditure. Don't forget, capital expenditure is for acquisition of what, of new one, or improvement to the existing. When you renovate, is a what, is an improvement. So renovated as well is also a what, a capital expenditure. Then you go again. How much is the amount? 2,000. Then next one will go again. They say procure more produce to the what? To the warehouse. Procure more produce to the warehouse. This one is what? Procure more produce. What you are selling, you buy more, is like you buy more inventory. Is this a capital expenditure now or a recurrent? This is a recurrent one. This is a recurrent expenditure. What is the amount? The amount is 35. We'll go again. Procure additional warehouse. Additional word, you procure additional warehouse automatically from the word warehouse. From the word warehouse. You acquire a warehouse. It's a word, it's a capital expenditure. Of what amount? Of 6,700. Thank you everyone for your participation, please. They say legal and what? And agreement fees on what? On warehouse acquired. Legal and what? So I want everybody now to please answer me now on this number 5. Legal and agreement fees on the warehouse. Legal and agreement fees on the what? On the warehouse. Is this a capital expenditure? Is it meant for capitalization? Because now when you say capitalization is that what? You are saying, oh, I'm going to add it. It should form part of my assets. But when you are saying recurrent expenditure, it means that what? Whatever the amount is, you are telling us to expense it. You are telling us to what? To expense it as expenses that occur during the period. So now, when you what? Legal and agreement fees on the warehouse, let me explain this. This is a what? This is a capital expenditure. This is a capital expenditure. Because, and we call it what? I call it what? We can usually call it professional, we call it what? Directly attributable cost. Look at this. When we are talking about the what? The LGAC, you can say, we say what? Legal fees. So any cost that is here is a what? Is a capital expenditure. Any cost that is what? That is here that I'm adding so that we're able to have this what? Total now is a what? Is a capital expenditure. So the legal fees that you pay is a what? Is a capital what? Is a capital expenditure. Okay. Any professional what? Any professional fees, you are going to what? You are going to capitalize it. Of what amount? 1,000 naira. The next one, repairs and maintenance. Repairs and maintenance will form where? Let me hear from us. Repairs and maintenance, is it capital or a recurrent? Repairs and maintenance, is it capital or what, or a recurrent? Anybody, please? Repair. That's a word. Thank you very much. It's a word. It's a recurrent word expenditure. It's a recurrent. It's a recurrent expenditure. Oh, sorry. Repair. The next one, salaries and wages for the month. This is also a word, a recurrent expenditure. What was the amount? 1,000. The next one, paid insurance, insurance premium. $200. And the last one, bought what? Computer equipment for office use. This last one is what? Anybody? Bought computer equipment for office use. 750 is what? Capital or what? Capital or recurrent? Bought computer. Any other person, please? Bought words, computer, capital or recurrent? Bought computer equipment. Capital or recurrent? You bought computer equipment. Computer equipment is a word, is an asset. So it's a word, is a computer. $750. So, and that's all about this particular one. About this particular question. Okay. So let's now move on to, so please let me hear from us, because we are moving on to another thing now, which is what? Which is depreciation. So the work file will be shared with you. So just listening to me, that's what I need. Later you can write. So let's now talk about depreciation. But before we go, then at least we have spent up to hour now. Do you understand so far? And we can go for a word now. Can go for a 2 minutes word, let's say a 4-minute break now, then we'll come back. But before we go for the break now, I would like to hear from you. Do you understand what we have been discussing so far? And let me make a brief recap of things that we are talking about. We are talking about assets. We say that what assets are resources that is being controlled by who? By an entity. As a result of what? As a result of past events, from which what future economic benefit is expected to what is expected to flow in. And we also go ahead to talk about what that asset is divided into two. We have the current asset, and we also have what non-current asset. Non-current asset is further divided into two: tangible and what? And intangible. So how do we determine the cost? Initial measurement is at cost. The subsequent measurement, which we are not going to be talking about, is not in our level, is what? Is either you use cost or you use what? Revaluation. We talk about the component of what? The component of the cost. The amount that you pay, the import duty, the development, the concept, less any discount, plus any directly what? Attributable what? Any directly attributable cost. Now we move on to talk about what types of expenditure. We have what we call capital expenditure, and we also have what we call recurrent expenditure. Capital expenditure are those expenditure to acquire a new non-current asset or improvement to the existing one. While recurrent expenditure are expenditure for the day-to-day. We also talk about what types of receipts. We have what we call capital receipt, and we also have what we call revenue receipts. Capital received is coming from what? When you dispose of what? A non-current asset. While revenue received is coming from what? From when you do what? From when you the receive from your what? From your ordinary course of what? The ordinary course of business. Okay. So, and we also do a simple illustration, which is has to do with what? Classification from one of the exam diet, which is what? Question 3B, September 2021 diet. So, and the question, let me attend to this question before we do it. Let's say when we renovate warehouse, we say that it is what? It was a capital expenditure. And when we repair what? When we repair motor vehicle, we say that is a what? It's a recurrent what? Recurrent expenditure. So let me tell you something. Any word, where is it itself? Repairs and maintenance of what? Of motor vehicle, which is 500. And we say what? Renovated the warehouse. Renovated the warehouse. It's a very beautiful question that you asked, and thanks for that. You see, sometimes there are some times that it will be very difficult sometimes to categorize some assets into a capital expenditure, and to categorize them into a recurrent expenditure. So, but in practice, let me tell you something. What we usually use is to be the amount of it. That is the materiality. Let's say, for example, now you change your you have a car now, and you change the battery. You change the battery. Let's say you buy a new battery. If the amount is what? If the amount is significant, if the amount is significant, we can capitalize it as part of what? When we say capitalize in terms of what? We are adding it as if it is it is asset. We are adding it to the cost of the asset. We are adding it to the to the cost of the cost of the asset. We are adding it to the to the cost of the cost of the asset. But if the amount is not really significant, we can do what? We are going to expense it. We are going to do what? We are going to expense it in our statement of profit or loss. So one of the things that usually serve as a guide is the amount involved. That is what you can use. But anything repair, from the ones you hear anything repair and maintenance, is going to be is going to be a recurrent expenditure. Once the name is repair. Repair now is different from renovated. Renovated is more significant than repair. Okay, so if it is repairs and maintenance, treat it as as recurrent expenditure. But if the word renovated is more, the word renovated is more significant than than repairs and maintenance. Okay. So now let's go forward. Let's go for a 4-minute break now. We are going to we are going to come back in 4 minutes time. Then we are going to be talking about we are going to be talking about depreciation. That's the next thing that we are going to be talking about. So let's go forward for a 4-minute break now. Then we are going to come back. And the next thing that we are going to be talking about is depreciation. So I'm going to start it now. So you can have you can use this time to write this particular one if you miss any of this. So in less than 4 minutes now, we are going to come back to continue. And what we are going to be discussing is depreciation. The topic is 2.
non-current asset and what? And depreciation. So where we are going next now is what? Is depreciation. So update this. We'll come back in the less than 4 minutes now to continue. Thank you, everyone. So welcome back, everyone, and let's continue now. Let's continue now. So we are going to be talking about depreciation. We are going to be talking about what? Depreciation. Capital expenditure like building, plants, furniture, and fleeting do normally last for more than 1 year. It is always possible that those assets may deteriorate with the passage of time due to what? Due to its usage. There's therefore the need to recognize the losses in the value of the non-current asset in the book of accounts. If this is not done, the value of the non-current asset in the statement of financial position will be incorrectly stated. The process of recognizing the loss in value. When we say depreciation now, depreciation is like a word. The loss, the fall, or the reduction in the in the value of in the value of an asset. Depreciation is what? Depreciation is reduction in value, in the economic value of an asset, due to what? Of time, due to what? The usage. Just like the phone that you're using now, or any of the equipment that you're currently using, listening to me now. The next thing now, when do you buy this? If you look at the phone or the laptop that you're using, it's going to depreciate. Why? As a result of what? Usage. You know, sometimes you'll be playing game and you see that the phone is very hot. So the value of the value of that your asset now is reducing gradually as a result of time, as a result of usage. You continue to use it, the battery is down, the phone is hot. So the economic value, the economic potential of your asset is also is also reducing. So what depreciation simply means? Depreciation simply means the decrease in what? In a non-current asset. Just take it like that. Depreciation simply means what? The fall or the decrease in a what? In a non-current asset. What is the definition that was given by IS 16? IS 16 defined depreciation and some concepts relevant to depreciation accounting as follows. They said depreciation is the systematic allocation of depreciable amounts of an asset over its useful life. That is the definition that is given by this regulatory standard. Now I make mention of it earlier. That this particular topic that we are looking at, the regulatory standard for it is IS 16. IS 16 is property, plant, and equipment. IS 16 is property, plant, and equipment. So these are the definition of some terms in accordance with In accordance with IS 16. We say depreciation, this is the systematic allocation of depreciable amount of an asset over its useful life. What do we now refer to as as depreciable amounts? What do you refer to as as a depreciable amount? Depreciable amount is the cost of an asset less its residual value. I want you to write something down. I said depreciation is on depreciable amount is depreciable amount is is cost. Depreciable amount is is cost. That is the cost that you buy this particular asset. When we say depreciable amount. Depreciable amount is the cost of the asset minus the residual value. If you not call it residual value, you can also call it scrap value. If you not call it residual value, you can call it salvage value.
You can also call it what? Scrap value. You can call it what? Scrap value. You can also call it what? Salvage value. Let's say, for example, now, you buy this particular asset for what? For 10,000. And every asset must have a what? A useful life. Every asset must have a what? A useful life. This your phone that you're using now, it have a useful life. You can say that, oh, this phone now is going to last me for 5 years. So every asset, you can make some estimates about the useful life of that particular asset. So if you say that, oh, this my laptop is going to last for what? It's going to last for 5 years. So you cannot tell us that, okay, what about at the end of the 5 years? I can still able to sell it as a scrap value of what? Of 1,000 naira. So when we are now saying what depreciable amount will not be the cost. How much do you buy it? Minus, okay, what will be the cost that you can sell this particular asset at the end of the what? At the end of the useful life. At the end of what? At the end of the useful life of the asset. So, oh, I can say that, oh, I'm going to, at the end of the 5 years, I should be able to sell it for what? For 1,000. So meaning that what? Depreciable amount now is what? Depreciable amount now is 9,000 naira. Depreciable amount now is what? Is 9,000. Depreciable amount now is what? Is 9,000. So it is this depreciable amount now that you are going to spread across the what? Across the useful life of this asset, which is what? 9 years. So meaning that what? If I'm going to say, well, I can say what? Depreciation. My depreciation will not be this what? This 9,000 now. I need to spread it over how many years? I need to spread it over 5 years. So meaning that what now? Every year, I'm going to be recognizing whatever the amount as what? As expense. Okay? Please hold on. Please hold on. So that is what? Depreciable amount. Depreciable amount is the cost of an asset or is the value amount. In the case of non-current asset, less the what? Less the residual value. When we now say residual value, this is the expected what? Disposal value of the asset at the end of its useful life. That is what we call residual value. Residual value is that, okay, at the end of the year, at the end of these 5 years now, how much are you going to be able to sell this particular what? How much are you going to be able to sell this particular asset that you buy for 10,000? Oh, are we able to sell it for what? Are we able to sell it for 1,000 naira? That is what we call what? That is what we call residual what? Residual value. And just like I've explained as well, every what?
every asset will have a what? A useful life. Every asset will have a what? Every asset will have a useful life. So useful life is the what? Is the duration. This is the period over which the asset is expected to be available. These are some of the things that cause depreciation. What are the question? This is where the fall in value of the non-current asset is due to what? To wear and tear as a result of what? Consistent what? As a result of constant what? Constant use. If you continue to use the asset constantly every day, there will be what? There will be depreciation. So physical deterioration is what? Is one of the causes of what? Is one of the causes of depreciation. Obsolescence, inadequacy, depletion, and timing words and timing factors as well. So have a look at some of these words, some of these difference, so that we can go on to talk about what, okay, if there's a depreciation, which is going to be, once you have a tangible non-current asset, there will be depreciation. Once you have a tangible non-current asset, there will be what? There will be depreciation. Once you have a tangible non-current asset, there will be what? There will be depreciation. So these are some of the what? These are some of the causes. These are some of the causes. Physical deterioration, obsolescence, inadequacy, depletion, and what? And timing what factors. So if there's a depreciation, which we are still going to is going to occur, what are now the methods that we can use to calculate this depreciation? What are the methods that we can use to calculate what? What are the methods that we can use to calculate depreciation? So these are the various methods that we can use to calculate what? To calculate depreciation. And we are going to be talking about the first four. We are going to be talking about the first four. That is starting from what? Based on our syllabus. We are going to be talking about the first four, which is what? Straight line method, or sometimes you call it what? Fixed instrument method. We also have what? Reducing balance, which sometimes you can call it what? Diminishing balance. We have some of the year units. We also have what? Unit of output method, and we also have what? Revaluation method. These are, we also have what? Machine hour method. We also have what? Depletion of unit Depletion of unit method. So we'll have a look at this now before we proceed. Have a look at this method before we start talking about what each one of them. Because in the exam sometime, and I think even in the last diet, I think the examiner asked a question about what are the method of what are the method of depreciation. Let me check. What are the method of what are the method of depreciation? So you can see, look at question 6. Let's say explain capital and what revenue expenditure with 5 examples. And the next question is saying what? List 5 methods of calculating depreciation. List what? List 5 methods of what? Of calculating what? Depreciation. List 5 methods of what? Of calculating what? Depreciation. So these are the various methods that you can use to calculate depreciation. And how many marks are they going to give you? They're going to give you 2.5 mark for listing what? Just list. 1, straight line method, reducing balance, sum of the year, unit of output, revaluation method. We also have machine hour method, and we also have what we call depletion of unit method. So when we say straight line method, how do we calculate that? If it is straight line method, with the straight line method will be, it will be the cost. To be the cost. This is the formula for straight line method. So this is the method for what straight line and the formula. So the cost minus what scrap value divided by the useful life of the asset. That is that for that. For reducing balance, for reducing balance, this is the what, this is the formula that you're going to what, that you're going to use to be what, 1 minus square root n. When we say n, n is the what, n is the numbers of what, n is the numbers of years. Your scrap value divided by what, divided by cost, multiplied by what, multiplied by 100. Okay, so because you are looking for what, in reducing balance, we are looking for the depreciation rate. We are looking for what, for the depreciation rate. So this is what reducing balance method. So if the depreciation percentage is not what, if the depreciation percentage is not given, this is how you are going to derive it. N is what? N is the useful life. Then we have the what? We also have the scrap value. Then you also divided by the cost, multiplied by what? Multiplied by 100. Okay. So let's say what? Let's take some example. Let's say for example 1. Example 1. Let's say the cost of asset is what? Is 3,000. That is the cost of the asset. And the scrap value is what? The scrap value is 200. It's 200 naira. And let's say the useful life is what? Is 4 years. The cost is 3,000. The scrap value, meaning that, well, okay, this is the amount. Sorry, it's supposed to be 200, not 2,000. So this is the amount that you're able to sell this particular asset. You're going to sell it for what? For 200 at the end of the what? At the end of the useful life. So let's say, for example, you are now asked to calculate the depreciation, and that what would be the yearly depreciation? What would be the what? The yearly depreciation? What would be the yearly depreciation throughout this what? Throughout these 4 years? Straight, let's say we are now using what? You are using straight line what? Straight line method. And straight line method is what? Is the cost minus what? The scrap value divided by what? When I say n, n means what? The useful life. So the cost of the asset is what? Is 3,000. What is the scrap value? The scrap value is what? Is 200. Then what is the numbers of years? The numbers of years is what? Is 4 years. So if you say what now? This is 2,000 what? 800. 2,800 divided by what now? Divided by 4 years. Then we are going to have what now? We are going to have 700 naira. So this is the depreciation that you are going to charge every year, and which is going to go to your what? Your statement of profit or loss. This depreciation is going to go to your what? To your statement of what? Your statement of profit or loss. It's going to go to your what? Your statement of profit or loss, which is what? 9, which is going to be what? 700. So you are going to have a what? A depreciation of what? Of 700 naira per year.
So now we are using what now? We are using straight line what? We are using straight line method. Let's say this is the question that you want. This is the question that you have. This is the question. And this is the solution. We have a question now whereby, oh, a certain asset now was purchased for what? For 3,000. The scrap value, meaning that what at the end of what? At the end of the useful life, you can still able to sell it for what? For 200 naira. And the useful life of this particular asset is what? The useful life is 4 years. The useful life is what? The useful life is 4 years. So what is now the what? Calculate the depreciation now using straight line. Calculate what? Depreciation using what? Using straight line method. So if you are calculating what? Using straight line, this is the formula for straight line method. Cost minus what? Scrap value divided by what? The numbers of years. Cost minus what? Scrap value divided by what? Numbers of years. Cost minus what? Scrap value divided by what? Numbers of years. The cost is what? 3,000. What is the scrap value? The scrap value is 200. You divide it by what? By 4 years. 3,000 minus 200, you have what? 28. 28 divided by what now? Divided by 4 years, you have 700. And that's it. We say what? 28, 2,800 divided by what? 4. You have what? You have 700. So that means that what? The depreciation that you're going to recognize every year now, it will be what? It will be 4 what? It will be 4 years. I'll be sorry, it will be 700 naira. It will be 700 naira. Okay? It will be 700 naira. So everybody, please, do you all understand? Or if you have any question, please, you can unmute yourself and ask. Don't forget the formula. The formula for straight line method is what? Cost minus scrap value divided by what? Numbers of what? Numbers of years. Cost minus scrap value divided by numbers of years. What is the cost? How much do you buy? Oh, it's 3,000. At the end of the 4 years, how much were you able to sell it? I was able to sell it 200. Divided by the total years, which is 4 years. 28 divided by 4, you have what? 700. So this is how we calculate what? Depreciation using what? Straight line what? Straight line method. Now, let's now go to the what? To the second one now. The example now. We want to use what? Reducing what? Reducing balance. We want to use reducing balance. Let's say that the what? The cost of the what? A machine. Let's just say a machine. Machine costs 12,500. The scrap value is, let's say, 5,120. And numbers of what? Numbers of years. Let me still maintain that. Numbers of years, sorry. Numbers of years is still what? 4 years. So now, what is now the depreciation now? Using what? Straight line method. Now, in straight line method, the straight line method is somewhat complicated than this. With the straight line method is somewhat easy. But this reducing balance, please listen to it very well. And I hope everybody is with calculator. Especially, I would like you to get the scientific word calculator. So let's say this is the solution. Now, what you are looking for now under what straight line method is that what we are looking for is the depreciation rate. So to get the word depreciation rate, this is how we get the depreciation rate. Depreciation rate it to be 1 minus what? Hold on, please. This is the formula, which is N scrap value divided by what? The cost, multiplied by what? 100. So in this situation, and this is 1, what is the useful life? The useful life is 4. So you're not going to say 4 now. Square root of what? What is the scrap value? The scrap value is 5,120. 5,120 divided by the cost. What is the cost? The cost is 12,500. Then now say what? Multiply by what? Multiply by 100. So if you have work now, I know maybe some of us are science students, so you should be able to get this. From your side, is anybody here with scientific calculator now so that I can take you through how you can get this? Or nobody? If you know you have a scientific calculator, let me just see it in the comment section. Or so that I can take you through how you can use this particular one. So please, maybe next time that you're coming, please come with calculator. It is very, very important. So in this particular one now, what you are going to do is that, okay, if you have a scientific calculator with you, press 4. Press 4. Then now, when you press 4, then press Shift square root. 4 first, then press Shift at the top. Then now press the square root sign. Once you press the square root sign, input all this number there and multiply with what? Multiply with 100. It will give you the rate straight. What I'm saying now is that what? From your calculator, you can press what? Just press the numbers of years. The numbers of year here is what? Is 4 years. So say 4 shift square root of this number divided by 12,500 multiplied by this. It will give you the words. Are you able to do it? Please, you can unmute yourself. Especially if you are using the natural display to be what? To give you what? To give you the right answer straight. If you are using natural display, you will get it straight. What I'm saying is, does anybody able to get this? Once you press 4, just say shift this number divided by this. Whatever you now have, you will now say what? Okay, 1 minus the answer, multiply by 100. It will give you that. Okay. Can you all hear me? Because everybody's silent here now. You can mute yourself. What I'm saying is that
we can hear you, sir.
You know how to get this because we need a rate. And if you want, you can download what I don't have scientific calculator, but I have it on my watch. I have it on my phone, so I can still use it to do it. So what you just do, just press 4, then press shift square root. 4 shift square root of this number, 5,120 divided by what? 12,500. Whatever you now have, you now say 1 minus the answer. Whatever you now have there, you now say multiply by what? Multiply by 100. It will give you the word, to give you the rate. Okay, so don't worry. At the end of this class, I'm going to maybe send you my screenshot of my phone, how you able to what, how you able to get this. Okay, but for this now, it is what the rate is 20%. This is what you are going to do. The first thing that you are going to do from your calculator, if you are using natural display, I don't know about other calculator, but there's a way you can solve this in mathematics too now. So just press what? You press 4. Then press shift from your word. Once you press shift from your calculator, once you press shift, then you press the square root. You input the words, input the number, whatever you have now, 1 minus your words minus your answer. Whatever you have, you multiply with what? You multiply with 100. From your calculator, your scientific calculator, you press 4. Once you press 4, then press shift. This, if you press shift, you are pressing this next. You are pressing shift, then the square root. Then input the word, the number, whatever you have, say what 1 minus the answer, multiply with 100. It will give you the word, it will give you the depreciation rate. Okay. Don't worry, at the end of the class, I'll do a voice. I'll do a voice so everyone will see. So once you not get this rate, the next thing that you now need to do, you now need to calculate the depreciation yearly. You're not going to say year 1. Please hold on. In year 1, depreciation will not be what? 20%. You are going to use that rate. 20 divided by 100 multiplied by what is the cost? If you say what now? 0.2. Then multiply by what? 12,500. You are going to have what? You are going to have 25. You are going to have what? You are going to have 25. So you write the word, the 2,500 here. The first thing that we could have, you need to say first is this. You need to put the word, the cost at the top. Let me say, this is the cost. Let's say it is in Naira. You say 12,500. So the cost is 12,500 minus this. That means that what is the balance? The balance now is what? The balance at the end of what? At the end of year 1 now, it is 10,000. You go to what? To year 2. You say depreciation, still based on the what? The rate. 20 divided by, no, we call it reducing balance. The depreciation now, it will now be on what? On 10,000 naira. 20% of 10,000, that is what? 2,000. So at the end of what now? Year 2, the balance is what now? The balance is 8,000. You calculate the depreciation for what now? Which is year 3. Depreciation, 20 divided by what? 100 multiplied by what? 8,000. 20% of what? 8,000, that's 1,600. $8,000 minus this one is 6,400. Then you go on to what? What is the last year? That is what? Year 4. Depreciation will still be what? 20 divided by what? 100 multiplied by what? 6,400. And this one will be what? Hold on. 0.2 multiplied by 6,400. This will be 1,280. So minus 1,280. So that means that at the end of what now? At the end of year 4 now, this one is what? 5,120. So that is how we calculate what depreciation under what? Reducing what? Under reducing balance. That's how we calculate what? Depreciation under what? Under reducing balance. Okay. So I'm still going to do a what? Voice notes, how you need to get, but you need to get your calculator with you. It's because some of us, maybe we are not with our calculator down, but to be able to get, based on this process that was, we press 4 from your calculator, then shift, press your square root, input the number, whatever you have, 1 minus that answer, multiply it with what? 100, you get the rate. So this is, once you now get the rate, the depreciation will now be what? This is how you now calculate the depreciation. For year 1, you say depreciation, the 20% that you derive, multiplied by the cost of the asset, which is 12,500, to give you what? 25. What is the balance? 10,000. So you can see now that under reducing balance, the depreciation is not going to be the same throughout the useful life of the asset. The depreciation is not going to be what? It's not going to be the same throughout the useful life of the asset. But assuming that it is under what? Straight line method. If it is under this straight line method, it means that what? Year 1. In year 1 now, let's say this is depreciation under straight line method. In what? In year 1, your depreciation was 700. In 2, it will be 700. In year 3, it is also going to be 700. And in year 4, it's also going to be what? 700. That is under what? Straight line. The depreciation throughout the useful life of the asset will be the same, regardless of the year. But under reducing balance, and other one that we are still going to look at, depreciation will not be what? The depreciation will not be the same. It will what? It will change. It will what? It will change as what? As we are moving. It will what? It will change. Please, do we understand? Let me hear first.
Yes, sir.
All right. So,
Yes.
all right, now thank you. What I will let me check this. Please hold on. Okay, this one was just theory, no calculation. What of this? I think I saw something here. So I want to give an assignment. I'll be sorry, I want to give a everybody will do. So now for this particular question 4B now, I want everybody to calculate. Oh, but you can. Okay, calculate the depreciation using straight line method. For this particular was question 4B now that you're looking at. Calculate what? Using straight line method. Because some of us are not with your calculator. So you may not be able to do the second one, which I need is straight. So what is the depreciation now in this question 4B? What is the depreciation using straight line method? Anybody? Don't forget the formula. Cost minus scrap value divided by the numbers of years. Please do this on time. What is the depreciation using straight line method? Question 4B.
Okay.
All right.
110,000, sir.
110,000.
Yes, sir.
Okay. Any contrary opinion to that? Is there anybody that is getting a different figure apart from, what do you call it, please?
110,000, sir.
110,000. Okay, thank you so much.
Yes, sir.
Is there anybody having any different answer apart from that? So if there's none, I can move on. So if there's no any contrary opinion to that, then let's move on. Now, I want to tell you something. This is what we call what? I want to tell you what we call depreciation schedule. Because you can see here, let's say what? You are required to calculate the depreciation charge, the accumulated depreciation for each year, and show the net book value as at the end of what 2020 accounting period in tabular form. You should show what? Using straight line and some of the year digits. Using straight line and some of the what? Some of the year digits. Using straight line and some of the year digits. Now, let me explain some of the year digits. That is another one. Some of the year words, some of the year digits. Let's explain some of the year digits. We have talked about line. We have talked about reducing balance. Let's talk about what some of the word, some of the year digits. Some of the year is very quite straightforward. So let's go now. If it is some of the year digits, what you just say is this. This is like number 3 now. Let's say, for example, you have an asset, example, under some of the digits. The asset costs 9,000 naira. The scrap value is what? Is 1,000 what? 800. Is 1,000 what? 800. And the useful life is 3 years. So you are now being told now that you should calculate what the depreciation using some of the year digits. That you should calculate the depreciation using some of the year digits. What you just say, this is the solution. You first of all say year. Then you say digits. How many years are you giving? You are giving 3 years. So I'll say year 1, year 2, and year 3. The digit now will now be in what? In descending order. So I will say 3, I will say 2, and I'll say 1. You add everything together here, this will be what? 6. So if you now want to calculate the depreciation, if you want to calculate the depreciation, for what? For year 1, it will now be what? 3 divided by what? What is the total? 6 multiplied by what? The depreciable amount. The depreciable amount is what now? This is the cost, 9,000, minus what? Minus the scrap value, whatever you are. For year 2, it will be 2 divided by what? 2 divided by 6 multiplied by what? 9,000 minus 1/8. Whatever you have, you write out. For year 3, it will now be 1 divided by what? 6 multiplied by what? 9,000 minus what? Minus 1/8. So whatever you have now, that is the depreciation for each of the year. Have a look at this. Don't rush yourself, please. This is how we calculate depreciation using what? Sum of the year debits. So if you say what? 9,000 minus 1/8 multiplied by what? 3 divided by 6. Anybody? Let me engage you a little bit. What was the depreciation for year 1? Can you all hear me, please?
36, sir.
3,000.
600. Yes, sir.
How about the next year?
Hello, sir. 24.
2 times.
Yes, sir.
What about the last one? And the last one should be, I think, 1, 2. Or check, sure.
One, two, sir. You're correct.
All right, yeah.
Yes,
So,
sir. Thank you. Yes, sir.
so the next thing that we're not going to see now, okay, you can just add it up. This 36, this 7, this 7, this 7. So that's the total depreciation. Okay, so this is how we do for what? This is how we do in what? And you can as well do it this way. You can as well say that, okay, if I say on 9,000 minus, if you say 9,000 minus 1/8, maybe you are going to have 7,200. So if you say 3 divided by 2 multiplied by 7,2, what are we going to have? Okay, sorry, 3 divided by what? 6 multiplied by 7,200. You can as well be doing it that way. Okay, so this one will also give you 36. You can as well say 2, this is 6, so sorry. 2 divided by 6 multiplied by 7,2. You're also going to have 24. As well say that, oh, 1 divided by 6 multiplied by 7,2. This will also give you what? 1,002. Now, you're still going to have you're still going to have 7,000. So it depends on the way that you want to approach it. But if it is to me, I'll still go for this. So rather than writing 1,818, it's taking some out of your time. So once you just net it up once here, you're just using, you want to say what, 9,000. I'll still say -1, -1, -1. No, it's taking time. So just do it this way as well. So once you just get the depreciable amount, then you multiply it straight. I hope everybody understand what I'm trying to say. Now, if you now look at this question now, okay, so you look at this question. Let's say you should calculate depreciation using sum of the year. So if I want to do sum of the year now, with this September question now. Okay. So I'm doing straight line. I'm sorry, I'm doing sum of the year now. Okay. So just like the word, the depreciable amount. So your depreciable amount now, it will be the word cost minus what scrap value. So in this question now, what is the cost? The cost is 3,750,000. So 3,750,000 minus what is the scrap value? The scrap value is what is 200,000. So this will be 3,550,000. You now want to calculate the depreciation, just like the way we just finished now. Abi, you're going to say year, Abi, and you're also going to say what is the date. How many years is it to use? It's 5 years. That is the year. Everybody can see it from here, 5 years. So I will say 1, I will say 2, I will say 3, I will say 4, and I will also say 5. This will now be 5, to be 4, to be 3, to be 2, it will be 1. So what's the total now? This is 9, this is 12, and everything is what now? This is 15. Okay, so my depreciation now. My depreciation will now be, to complete this, so 5 divided by what? 15 multiplied by, oh sorry, this one will be 4 divided by what? 15 multiplied by 3,550,000. Next one will be 3 divided by what? 15 multiplied by, this will be 2 divided by what? 15 multiplied by, and this will be what? 1 divided by 15 multiplied by, so whatever you are, that is your depreciation in each of the words, in each of these years. And that's it. So you cannot put the unit of measurement. This one is, please always follow the currency that is given to you in the exam. It's going to be what, it's not always going to be Nigerian all the time, because this exam is West Africa. So this one is given in what Ghana cedis now, so representing what in Ghana cedis. Okay, so that is that about that. So now they ask you to prepare a schedule. You can see the requirements. You are required to calculate the depreciation charge, accumulated depreciation for each of the year, and show the net book value at the end of what 2022 accounting period in tabular form. So you are not through yet. You don't need to prepare what year. You need to come down now and say year. You need to say what I can call this one opening balance. Then I'll call this depreciation. Then I'll call this accumulated what depreciation. And I'll call this closing what closing balance. Closing balance, which is the same thing as what did they even refer to here? Net book value, NBV. We don't normally call it NBV again, sir. We call it what? Carrying amount. We call it what? Carrying amount. So what is carrying amount? Carrying amount is what? Is cost. Carrying amount is what? When you say CA, this is cost. You are not going to say what? Less what? Accumulated what? Depreciation. It will give you the what? It will give you the carrying amount. So this is what we refer to as carrying amount. In the olden day, we call it what? Net book value. So we no longer call it net book value. We call it what? Carrying amount. Okay? So we can now start now. We have what? Year 1, we have 2, we have 3, we have 4, and we also have what? We also have 5. So when we say the opening balance is what is the cost? The cost is 3,750,000. Now, you need to get this figure so that we can proceed. Assuming that it's using now, it could have been more fast. So, but let me do this one first so that you understand what we refer to as this schedule. I'm going to say that what 5 now divided by what? Divided by 15 multiplied by 3,550,000. So that means that my depreciation now is 1,183,333 for the first year. 1,183,333. So you bring that one here to 1,133,333. The accumulated depreciation will be the same. You are now going to say 1,833,333. Now, you will now say that for us to get the closing balance, let's say this one is A, this one is B, this one is C, and this one is D. For us to get this D, hold on, let me clean this. For us to get this, you now say D equal to what? A minus C. That is the opening balance minus the what? The accumulated depreciation. It will give you that. So this is 1 million, sorry. So this is 183. So I will now say what? So you can now say 3,550,300 minus 1,183,333. What do we have? We have 2 million. Sorry. This one is 750. That is the cost. Now be 3,750,000, sorry. 3,750,000 minus 1,183,333. Then you have what? 2,566,000. So 2,566,667. Let me do another one so that the next one, this balance, the closing balance of year 1 will be the opening of what? Of year 2. The closing of what? Of this. The closing of what? The closing of year 1 will be the opening of what? Year 2. So I'm bringing this in as my opening balance. 2,000,005. Sorry. Oh, no, what's up? So you now need to watch this. I'll stop at year 2. You now need to get the depreciation for year 2. That will now be 4 divided by what? 4 divided by 15. Then multiply by what? 3 million, sorry. 3,550,000. That means that we have what? 946,667. That is 946,667. So you bring it down here. 946,667. So you now need to add now. So C now. C will now be the what? The closing here plus opening here. So you now need to say what now? Plus, let me cancel this so that you get it. So I want to get the accumulated now. The accumulated will now be, what is the accumulated that you have in what? In year 1. The accumulated that you have in year 1 is what? 1,183,000 plus 946,667. Then you have what? 2,130,000. So you write what? 2,130,000 here. So 2 million minus 946. Oh, sorry. So 2,566,667 minus this. Sorry, this is true. Minus this time. Sorry, this will be B. That's a mistake. So that's how you get the closing words, the closing balance. It will be on the B part, sorry. Then the next one, you bring this down. You still say what? You go 3 divided by 15, multiply by 3, 5, 5. Then you have what? 7, 10. So we have what now? 7, 10. So you bring the 7, 10 here. So 2 million, which is the accumulated last year, 2,000,130 plus 710. 71 this. Then you have for 2,840. So what is now the closing now? 1,620 minus 710. It will give us what? 910. Let me finish this question. There's something that I would like to explain to you at the end of the day. Let's go together. So this is 910. The closing balance must be the same. So you are going, let's calculate this as well. So let's just finish this depreciation. So 2 divided by what? 15 multiplied by 3,550,000. That's what? 4,337,333. The next one, just say 1 divided by, so that everybody will understand, 1 divided by 15 multiplied by what? 3 million. So this one is what? 236. 236 667. So this is the depreciation. So just copy everything down. 473. 473,333. And this one is what? 236. 667. Okay. So now we are now going to say what now? 2,840. 2,840 plus 473,333. What do you have? You have 3 million. Oh, sorry. 313,333. So you're not going to say what now? 910. 910 minus 473. We have what? 467. So you bring this down, 436,667. So minus 236,667. You can see you have what? 200,000. This is what I'm deriving. This is what I'm trying to do. That's why I finished this question. So if I say what now? 313 plus 236,667. I mean that we have this. So you can see that the closing balance in this particular schedule is the same thing as the what? As the scrap value. It has to be the same. What you are going to get, this closing balance must be the same with what is here. Look at this 200,000. This is your closing balance of 200,000. In your depreciation schedule, this is what we call depreciation schedule. Must be what? It must be the same. So you can see now that we are also having what? 200,000 as well. At the end of the what? The useful life of this asset. And assuming that it is what? Let's say we are doing on what? On straight line. This is one on straight line method. It's still going to be the same format. Yeah. Our opening words, opening balance, our depreciation, our accumulated words, depreciation, and our closing words, our closing balance. These two, these three, these four, this is 5. The cost of the asset is what? The cost of the asset is 3,750,000. And if you say 3,750,000, since we are using straight line, I can just say this amount divided by what? Divided by, sorry, it's 5 years. Divided by 5 years. That means I'm going to have what? 710 as the what? As the yearly depreciation. The yearly depreciation will be what? It will be 710. This is how we get the 710. You will just say the word, the cost. Since you are using straight line method, this is the cost. Say cost minus what? Your scrap value divided by the numbers of years. Your cost is what? 3,750,000. Abi? And the scrap value is what? Is 200,000. So 200,000 divided by what? 5 years, you are going to get what? You are going to get 710. Okay? So this is how we get it. So that means that every year now, I'll say what? 710. That's why straight line method. One of the advantages is that what? It is very simple to calculate. 710. You also say what? 710. So the accumulated in the first year will be the same thing as the depreciation. 710. If you remove 10,000 naira from this, you have 304. You bring it down here as well. $710 plus $710. Sorry, 710 multiplied by 2. Okay, 1,000,000,1420. Minus 304. You have what? 1,620,000. I'm sorry. If you say this minus 710, you have 2 million. So you bring this down back, 2 million. Minus 710. I'll have what? 1,620. I'll bring this down back to. I also say this minus what? 710. This will be 910. This minus 710. I must have that 200 back, which is 200. Okay. So that is it. Let's say this is A. This is what? B. This is C. And this one is what? D. D equal to what? A minus what? Minus B. So do the accumulated by yourself. So basically, these are the what? These are the three methods that we have in accordance with our words, in accordance with our syllabus, which is what? The straight line method, the what? The reducing balance method, and we also have what? The sum of the what? The sum of the year. The sum of the year digits method. Okay. So let's stop here for today. Tomorrow class, by God's grace, we are going to what? We are going to continue. We are going to what? To continue to do the what? The accounting what? We'll be talking about the what? The accounting for how do we account for depreciation in terms of what? Which account? How are we going to do the what? The debit and the what? How are we going to do the debit and the what? And the credit? That is what we are going to talk about tomorrow in tomorrow's class, which is what? The bookkeeping entry. Bookkeeping what? Bookkeeping entry. So that is what we are going to be talking about in tomorrow's class. The bookkeeping entry and disposal. This is 1 and this is 2. We are going to be talking about what? Disposal. Disposal of what? Of non-current assets. So what are the bookkeeping entries that we are also going to maintain when it comes to what? When it comes to non-current asset is being disposed. So this is where we are going to watch. We are going to stop for what? For today. This is almost very taking the time. So we'll continue from what, and that will be the last section for what? For depreciation. By tomorrow, we'll talk about the bookkeeping entry and disposal of what? Of non-current assets, and solve some of the what? The practice question that we have in the words. In the general practice question that I sent earlier. So thank you very much. If you have any question, please, you can unmute yourself. And I'm going to share the work file as well, so you don't worry about that. So I'm giving you a task now. Do the what? Do the accumulated depreciation for this. So it's just this, which is what we say 1,420 plus 710. This would be what now? So plus 710 as well. We have 2,840,000. Plus 710. Then we have what? So you can see now that in regardless of the word, the method that we use, the closing balance must be the same. Irregardless of the method, the closing balance must be the same. So this is the word, this is the depreciation word schedule. This is depreciation word schedule for what? For this particular word, for this particular question. So thank you everyone, and see you tomorrow by God.
Okay, thank you, sir.
Thank you.